Now these are questions that I get, okay, in my inbox that make me say things like, make this make sense. So Serene, read the first one.
All right, cool,
Let's
cool.
go.
I went in firm on a 700,000 townhouse because my realtor said it was the only way to win. But the bank declined me after reviewing my file. I lost my entire $30,000 deposit. How could this happen if I was pre-approved? Kenneth, make it make sense.
Okay, good. And I'm going to break down a couple of these terms in here, but there are many situations out there where you're looking to go buy a property and you take these risks, right? Risks where your agent tells you, for example, hey, I have to go in firm on a home. So let me just dissect this actually in simple terms, okay? What does firm mean, okay? When you are buying a property, usually you have these this one term in there, paragraph. It's called it's in the clause. It says that if, as a buyer, if I buy this property and for whatever reason I'm not able to get approved for this property, then I can get my money back in full without any deduction. So there's a clause that actually says that. And what ends up happening, what the banks tell you guys is they say, hey, as a buyer, the banks will tell you, and now we're in Canada, so TD Bank, RBC, Scotiabank, whatever it is, the banks will tell you, hey, when you go out and find a property, I just need you to put a condition in there that says, give me the bank 5 business days just to confirm that we're all good. The bank may tell you you should be approved for, in this case, $700,000. However, the bank still tells people usually just to go by the home and to circle back with me and give me 5 days. Okay. So what happens, what firm means, they went out and purchased this property, and they didn't put that condition in there that gave them an opportunity to double check with the bank. So they went in firm. They went in and told the seller, hey, here's my 30K deposit, and I already have my financing all wrapped up. I don't have to go and double check with anything, because when you have to double check, that means you can double check. And if the bank says no, that means you can go back to the seller and say, give me back my deposit because the bank said no.
Kenneth, what is it called when you have to double check? Like, what does that look like from a paperwork standpoint?
So there's a conditional clause. When you buy a property in Ontario, anywhere for that matters, you typically put in a conditional clause that says, I will buy your home on the condition that I can get my financing with the bank. And if I do not get my financing with the bank, I can get back, in this situation, the $30,000 deposit in full without any deduction. That's how the clause reads. Now, what happened in this situation is when you have like 10 offers, okay, on one property, okay, you have to now compete. And there are situations where buyers work with their realtor, work with their bank in advance, and the bank truly gives them that approval. And they say, listen, I've already checked everything I need to check. Here's a signed letter that says, I will approve you for $700,000. Don't worry about it. So out of 10 buyers, they usually have at least 2 or 3 of them that have already done that due diligence. Everybody else hasn't went that far. So what happens is, in order to win these bidding wars, that's what they have to do, because there's always going to be at least 2 people that don't need that clause because they truly are good. So that's why in this situation, the realtor said, listen, like if you're going to win, then you have to be able to go in firm, which is like, you can't have that in there, because what would you do as a seller? Would you take, for example, if someone's offering you, Shireen, $1 million, but they need 5 business days to come back to you to let you know if they can get approved for it, or someone says, here's $990, here's $995, but I don't need 5 days.
Yeah, you get it now.
Cash, boom.
You're gonna take the now.
Most sellers say, no, cash now. So that's what ends up happening, right? So that realtor was like, okay, in order to win this, you have to go in firm. Right? There you go. And I'm gonna go over how to protect yourself there later on, but go in firm. A deposit. She lost the deposit because even when you buy a property and you're saying, I'm gonna buy this home for $1 million, and the closing date is gonna be like in 90 days, you're telling the seller, hey, I'm gonna buy your home and stop advertising it to everybody else because I'm gonna move into your home in, let's say, 90 days. So in order to get the seller to actually do that, they're gonna come and say, well, I need some sort of money up front. I need some sort of deposit so I know that you're serious. So that's what it was. So when you're buying a property, you also have to give a deposit. Now, normally people tend to ask for 5%.
Yeah.
Right. That is a common thing, 5%. But 5% was easier back in the day when homes were worth 400 grand.
Right.
Okay. Right.
Yeah.
5% there's $20,000. But now 5% is a lot of money. So usually, like especially if the average home in the area is worth $800,000, typically deposit is anywhere between 20, 30 grand, maybe 50,000. But it's very common to put a 30K down deposit. So in this situation, she put this deposit down on the property because it's a requirement in order to secure a home before you actually move in.
The viewers want to know.
Yes.
They want to know, can they hold the realtor liable? Give me back my money. I'm not slashing tires,
Right.
but real talk, you gave me the confidence. I'm
Right.
coming to you, the professional.
Right.
We've signed that realtor client agreement that you're going to work for me. You're going to go out there and
That
find
one day that you're going to sign with me, by the way. There's a process to doing that. And this is important. Now, I'm not trying to get realtors in trouble. I am not. I'm actually
Neither am I. I'm just here for the people,
whatever.
Kenneth.
I'm pro realtor. Okay.
What?
But this is the truth. People do lose their money.
Right.
And I believe that fingers can be pointed. I'm actually very big on fingers must be pointed. Right? I'm ready to hold that. So fingers must be pointed. What I mean by that, and I'll tell you a quick story here, okay, guys? There was a guy, Ryan Rigby. I'm going to share this with them. He's a cop now, right? Love that guy. So back in the day, we were on a school bus and we were on high school, right? On a school bus.
What school? Tell the people.
RH King. We lost a game in soccer.
Mm-hmm.
And I don't know whose fault. If there's one kid, it was definitely that kid's fault. You lost this game. You made the bad pass. It was intercept.
You were on a team, because this does not sound like a team
It was
player.
a team, right?
I'm talking about you right about now.
What happened? Right? No, I'm on the bus. Now, Ryan was one of our better players. He's, I think, one of the captains. And either way, we lost the game, but everyone on the team knew that, bro, that guy did it. Like, you made the bad pass. You caused the breakaway. We lost the game. It's your fault, right? We got on the bus, and the teacher at the time, I didn't want to make that kid, I guess, feel bad. So he ended up saying, all right, guys, we win as a team, we lose as a team. Mm-hmm. Ryan was like, no. Fingers must be pointed. And then he was like,
and Ryan is now a cop.
And then it was, Ryan's like, it is your fault.
That's crazy.
So I'm there in the back.
So Ryan is the only child, and he had some only child syndrome.
So I literally, I'm just dying in the corner. I'm like crying. I'm like putting my shirt over I'm just laughing so hard. But I took that and I told him, I saw my Lifetime in Ajax the other day. And I said, I took that moment for the rest of my life. I'm like, end of the day, we can all dance around whose fault it is, but it's somebody's fault. People tend to like this mentality when they're hanging around me, because I'm like, it's either my fault, whose fault is it? Fingers must be pointed, because when you now just lost your 30,000, you're looking for blood. You're just like, I want my 30, not blood, literally. You're looking for 30K.
I want my 30,000.
You want your 30K.
Yeah.
So whose fault is it?
Because you know what? And I don't necessarily agree with the whole fingers must be pointed. And you're also a parent. I'm a parent. And I know, like, when your child starts playing sports, because we've had this conversation.
Yes.
That scenario is going to come back up. And the finger might just be pointed at your child.
Yeah,
but I digress on that.
Yes.
I do want my money back, because what can I, like, where does this put me for the next opportunity? Am I just like SOL because now I have no deposit?
Right. So
what
here we go.
happens there?
So this is the thing. So and the question really is, how do I get my 30K back?
Yeah.
Now, in order for you to get your 30K back, you need to be able to identify whose fault it is. And then the world needs to also be able to identify
not the world.
Well, the RICO board, the council that's in charge of getting you your money, they need to find whose fault it is. Unless somebody points a finger to blame somebody, then no one's getting paid and you're not getting your money. All my lovely clients, that will say things like, Shireen, where I don't like the mentality of fingers being pointed. They like when Kenneth Poppins, their agent, and steps in. It's like, no, someone's paying you back.
Yeah.
Someone's paying you back, and I'm out for blood. So to answer your question, here's how it goes. It is my job as a real estate agent to put in a clause in the contract that actually says, hey, listen, this offer is conditional upon X, Y, and Z. Now, I have to do my due diligence as a realtor to actually double check with you to make sure as my client that you actually have a real pre-approval. I don't just take your word for it to say, hey, Ken, I went out and got a pre-approval from CIBC. I'm approved. Don't worry. I personally say I need to make sure.
Yeah.
I want to see paperwork. I have to see what I need to see in order for me to have the confidence that you truly are pre-approved.
I got a question for you. Does that pre-approval need to be within a certain time frame?
Yeah. So they are typically pre-approvals. They're only valid for like say 90 days until you have to have it renewed. So if you come to me as a client and you come and you tell me, hey, I'm pre-approved, I'm good to go, and then we go and firm and now you are not pre-approved, then that's not my fault.
Right.
However, the Real Estate Board, RECO, the Real Estate Council of Ontario, they see things a bit differently as well. They see things like it is my job to make sure that you're good. So what ends up happening is to protect yourself as a real estate agent, what you should do is you should put the clause in the contract so the client can see it. Then I say, Shireen, you are waiving this. So I'm putting an X through this clause and you are telling me and the world that you understand that this clause should be in here, but you are waiving it. You understand that if you are not approved, you are going to lose your deposit. So you better be confident that you have your pre-approval. Right. Now, sometimes clients go say, whoa, I'm not that confident, right? Now, if the realtor does not put that clause anywhere in the contract, it's nowhere in it and doesn't make you waive it, and then now you're like, I signed this contract and I didn't even understand it because I'm waiving something, I didn't understand it. That's when RECO can kick in and they can say, well, you never, right? So realtors need to protect themselves by making sure that if a client goes in firm, you make them scratch out that condition because at least it shows that they read it and they understood it. But there are clients that say, I didn't understand what firm meant. My realtor told me to go in firm, you're okay. They didn't explain to me that if I do this, I'm reneging on my deposit potentially, then that's fine. So what you do is you can take that to the Real Estate Council of Ontario, you can present your case, and there have been situations where they will now get back their money because every realtor must have insurance. It's called RECO insurance, and that we pay into every single year because if a realtor is liable for damages, we may not have $100K in the bank sitting there, so we all must have insurance. Right. So it is possible to get your deposit back, but you would really have to really show negligence, and it's a case-by-case situation. So
one more question, sorry. Say, I've understood this because I've read what firm means. There's no small print. There's no...
The clause that you are actually scratching out in this situation, it reads that this offer is conditional upon this $30,000.
Right.
And if I am not approved within 5 business days, I can get my deposit back in full without any deductions. That's what the clause reads as. Okay. So when you are scratching it off, you're literally scratching off something that says, I can get my money back.
Right.
So it is very clear when you read the clause that you understand what you're doing. But the main thing here is that they didn't know that they were going in firm at the time. So they didn't know that they had a way out of the situation. Okay. Makes sense? Yeah. So a pre-approval now, this whole question is really based off of 3 things. You know, what is a firm offer? What do you mean by deposit? And what do you mean by a pre-approval, right? So what happens now, you have a real pre-approval and you have a fake pre-approval. A fake pre-approval is when you walk into the bank and you say, hey, I believe this is my income, and they pull up some numbers and they don't pull your credit and they say, okay, based on what you're saying to me right now, you should be approved for $800,000. So let's say this example here, you should be approved for $700,000.
Right.
Right. That's what happens in the bank. Now they have not yet went and called your job to verify your job. They haven't yet went and pulled your credit. The bank hasn't yet pulled your credit and all of that. They've asked you what debt you have. You said, I have a car, I have OSAP, I have whatever, right? And based on what you tell them, they say you should be approved for this. But what ends up happening is when they actually go and pull your credit, they find out that, oh, you actually have this Visa. Oh, I thought I closed it. Well, it's still open on my records. That Visa card, 10K, I forgot. So when you pull, you're right. So when you pull the credit, it's like, okay, Pandora's box opens up.
So drastic.
Right? Then they ask you, is your credit good? Oh yeah, I think it's good. And then you pull it up later, so a fake pre-approval is when they just ask you questions based off of you. Yeah. And the bank hasn't taken and they haven't called the job letter, pulled the credit yet. It's all based on what you said. And then they say you should be approved for this.
But is that in writing though?
It's in writing.
The bank will say,
Yeah.
they'll put that in writing. You
yeah.
should be based off of the information you gave me that I did not validate.
It's a in the words it actually says like this is not a
official.
This is not official, right?
Okay.
But it's like a pre-approval, but it's not.
It's like
right?
a pre-approval.
Pre-approval. Now, why the banks do this is because the banks don't know when you're going to buy something, Shereen.
Right.
The banks have no idea. The banks will, like, you may walk in there and you may buy something in a year or never buy anything. But the banks have no interest in going through a due diligence process to call your job and do all this work to verify that you're good. If you come and say, I didn't buy a house yet, what they would rather do is they'd rather say, listen, you should be good here. Yeah. Go out and find a home. When you find the home, give me the bank 5 days to then go and run all these numbers, then to make it official. That's the process in the bank.
Right.
So
on that pre-approval, does it say like there's no home or like shouldn't there also be something stated on that because it's not an official approval that states this is not official?
Right.
Like this is not going towards something. You're just checking.
Well, remember, like it looks almost the same as a real approval letter because at the bottom it says this is on the condition of verifying income, on the condition of verifying this, verifying, but it's not official.
Okay,
right.
Then the finger goes to the realtor.
Huh?
Then the finger goes to the realtor.
Right. So what happens is so there's a fake pre-approval. It's not real. Now, a real pre-approval is when you get the bank to actually call job and do this and pull your credit, which is a big thing. They actually pull your credit and they actually do their due diligence and they actually sign it on paper that says, listen, you are pre-approved for this amount of money because they've actually went and gone through their due diligence, right? So that's actually what a real pre-approval is, right? Okay. So when you're in this situation, it's quite clear that this lady did not have a real pre-approval. She just had, she thought she had a real pre-approval, but by the time they actually went and pulled her credit and called her job, I said 90K a year. Well, no, I called the job actually has you making 86,500. Oops, $4,000. Well, you may think it doesn't matter, but then it matters, right? Oh, the car payment, this and that, and they start finding more things, right? And then when they start finding more things, that's when sometimes they say, okay, well, you're no longer approved for 700, you're now approved for say 680 or something, right? And that's when you run into problems because you already went firm on a home thinking that you're good for 7.
All right. And my final question would be at the moment, is. Can the realtor do any type of validation with the bank? Because doesn't the realtor also ask, let me see your credit as well, or let me pull your credit as well?
No, realtors don't. Great question. Realtors don't pull
credit.
Now, this episode is really about the buyer experience, but you have to understand there's relationships in real estate. You have the relationship with the buyer. With your buyer, but also there's the mortgage agents, right? It's like a marriage. Okay. Real estate agents and mortgage agents.
Well, it makes sense. Look at your marriage.
Me and my wife, right?
Yeah.
So we have our jobs to do.
Yeah.
It's the mortgage agent's job to get the paperwork done, and it's the realtor's job to negotiate the best price for the client, find the home, take them out, etc. Okay. Right? It's 2 distinct roles, right? So it is the job. So I work with multiple mortgage agents, right? I work with mortgage agents with most of the major banks. Right. I have an inside person at all the banks. I have mortgage agents that don't work with one bank. They're affiliated with multiple banks. So it's the mortgage agent's job to actually do that. That's actually their only job. That's actually their job, the description. I help people get a mortgage.
So then, of course, there's a follow-up. Could we be pointing the finger at the mortgage agent?
Yes. If your mortgage agent comes and tells you that you are officially pre-approved with the bank and then you're not, then that's a finger point for sure, right? But what happens 99% of the time, it was never a real approval. It was just a fake pre-approval and they walked into the branch and they got a fake pre-approval from the branch and they took that out and they told their realtor, hey, I'm pre-approved, right? And not understanding that the bank's approval, it wasn't really real. And the realtor just came in and went off of the word of the client, right? But if the realtor went and asked the client, hey, like show me your pre-approval letter, then they wouldn't be able to produce one. Then it's like, okay, well, we're not going in firm on anything unless you have a signed paper or some sort of document from a mortgage agent or the bank that has your name on it that says, I've done my due diligence and you are officially pre-approved because your credit's been pulled and all of that. Makes sense?
Yeah.
So that's what she didn't have in this situation. There we go. So I think, so that's like a breakdown of what I mean when it comes down to like what a firm offer is, deposits, and then what a pre-approval is, right? So unfortunately, in this instance here, there are 3 key errors that I see that this client ended up making. The first error was that they relied on a fake pre-approval and it wasn't really a real pre-approval, and she didn't understand the difference between what those 2 things were, right? Number 2 here that I have some notes, another error here from the realtor side is that you do have a due diligence to confirm and look at paperwork for your buyer because they're new to this. You've sold homes all over the place, right? The realtor should never allow their client to go in firm without seeing paperwork that we should know what it looks like to ensure that the client is safe. So I think that also should never happen ever. Make sense. Because you just don't let someone buy a home without seeing paperwork, because we know errors that are being made out there. Okay, so I don't blame the client on this one as much. And then the kind of last error is that I don't know. It's like, actually no, I'm thinking the 2. I'm not going to fluff it up. Yeah, you know what I mean. So know what a pre-approval is from fake to not, and you also have to make sure that before you're waiving anything, you have to understand that know what a pre-approval is for sure. And the second thing is the agent's job really to make sure the client understands what going in firm means, because they have to let the client know what's going on as well. So those are kind of my 2 main points there. So key advice, it's when you are buying. Oh, and third thing actually I want to say, it's you should be doing your due diligence, right? You should be doing your due diligence in advance, because the truth is that if you're not going, and the realtor's right, if you're not going in firm on a home, you're not going to win a home in bidding war season, because I guarantee there's going to be 2 or 3 people on any offer that had already went to the bank in advance and made them do the work. Right. So the error is that I don't care. Banks don't care about you having to beat 10 people and losing. Yeah. I don't care from the bank. I don't care that the banks have to do work without knowing if the buyer is going to buy anytime soon. So it's a standoff, right? So for me, I told my mortgage agents, listen, my clients are going to buy something this year. We're out there house hunting actively right now. I know we're going to buy, so I need you to do all this work. I need you to do all this work right now. Yeah. So I make all my mortgage agents do all the work now in advance, even though they say, hey, find a home first. But I make them do the work now so I can go into the bidding war firm. Because go in
firm all the time?
All the time, yeah.
Damn.
Yeah. Okay. Because I get that paper signed. I know they're good. Right. I see the paperwork that I need to know that this client is actually good. So when I go to my bidding wars, not only am I able to win them, I'm able to win them for less money. Right. I'm like, okay, like here's 980 firm. Right. But if you want to go for $1 million condition, that's on you. But my 980 is wrapping it up right now. So my clients, not only my clients, they're saving money on the buy side, and they're actually winning the home and not losing all over the place, right? So the other error that was being made is like, you just understand as a buyer that you should be getting these real approvals in advance of going out, so you can actually save more money on the buy side anyways. Right. You'll always be able to offer the seller less money if you have a firm deal, right? So that's something that you guys should really take away as well. But I think the whole point, like the key advice of this podcast, I would say for this episode at least, is 100% I want you guys to, if you're going in firm, understand what that actually means. And you should be going to the banks and getting a real pre-approval before putting offers on any property, because you'll actually save more money and you'll have a way better buying experience, because you'll be able to beat out other people if there are multiple offers.
You heard it here.
All right, guys. Thank you so much for the first episode. Talk to you guys later.